Welcome, dear traders. We are watching a recap of the Asian session. Today, speculators are looking forward to the US inflation data, so risk appetite is low and as stocks resumed a gradual drop. Asian stock markets also fell due to bearish sentiment on Wall Street. Traders are getting rid of risk assets. Fed Chairman Jerome Powell said that the regulator would make rate decisions based on incoming data, so traders await fresh macro starts with a bated breath. Rising consumer prices may force the central bank to stick to a hawkish stance. Such an opinion was voiced by a New York Fed President John Williams. He noted that the regulator could raise rates further if necessary. First of all, we haven't said we are done raising rates. We are going to make sure we are going to achieve our goals and we are going to assess what's happening in our economy, the policymaker stressed. His statements only increased market uncertainty. President Joe Biden and the top congressional leaders were unable to reach a bipartisan debt limit agreement. Negotiations have been postponed until Friday. It means that the bearish sentiment could last until the end of this week. The economic optimism index fell to new lows. This indicator measures Americans' opinions and outlooks on the economy over the next 6 months. It has remained in the contraction zone, namely below the 50% line, for almost 2 years. However, in May 2023, it plunged to 41.6, the lowest level since February. For the US dollar, the risk of default and its consequences are extremely negative factors. In the Asian session, it was rather volatile. It tried to rebound on the prospects of new rate hikes by the Fed. However, it dived to the lower border of the 101.50 and 101 points due to concerns over inflation data, so peers regained control again. The greenback slid to 101.5. It's likely to decline gradually until the publication of inflation data for April. Currency pairs that have been stuck in the narrow range may finally have a chance to escape after the release of the inflation report. For example, the yen entered the price corridor of 135.10 and 135.50 and made an attempt to climb against the US dollar. It also gained momentum as a safe haven asset, and the yen rose on concerns about the banking sector and the risk of default in the United States. However, the greenback is not ready to give up as it's stronger than the yen amid the rate gap between the Fed and the Bank of Japan. If the CPI grows, the US dollar is sure to recover. The dollar-yen pair was rather volatile due to a mixed fundamental background. In the Asian session, it was trading at 131.20. Although the US dollar weakened against its rivals due to fruitless negotiations on the debt ceiling, it was still stronger than the Australian dollar. The Aussie slipped below the support level of 0.6770 and consolidated at 0.6755. Oil prices also fell sharply in the Asian session. The Australian dollar as a commodity currency is very sensitive to price fluctuations in the oil market. It also decreased due to external factors and risk aversion. The AUD USD was moving in the downward range over 0.6750 and 0.6776. In the morning, the New Zealand dollar entered the red price corridor of 0.6329 and 0.6350. However, its attempts to rise against the US dollar were more successful compared to the Aussie. As a result, the Kiwi-dollar pair was extremely volatile. The Kiwi is now strong amid expectations of a rate hike by the Reserve Bank of New Zealand. The meeting is on a tap in 2 weeks. It means that the Kiwi is likely to grow higher until this event. On Wednesday, market tension ahead of inflation data increased significantly, so the Kiwi had to retreat to 0.6332. The CPI report may trigger sharp price swings in the market, and this is why you should be cautious and not make hasty decisions. That's all for now. Please leave your comments down below and see you soon.